$3,029 for an ounce of gold. It has gone through the roof. And there again, if you're patient, it definitely pays out. Very important for the old generation, giving it to the young generation to say, yes, this is the younger generation. They have different ideas and they should follow those ideas.
Welcome to Swiss Money Secrets, your go-to podcast for insights on offshore investing and banking from the trusted Swiss perspective. Let's get into it.
So here we are, back with the Swiss Money Secrets podcast. We are very excited for today's episode. We have Robert Vrijhof with us, the founder of WHVP, sitting with Jamie Vrijhof-Droese, the second generation owner of WHVP. And today we're going to be diving into the legacy of a family business from the first generation to the second. Before we get into everything, I think it would be fun to jump off with some, I'd say, an interesting piece of news that I'm sure most of our listeners are aware of. Gold over $3,000 an ounce. Rob, I mean, you've seen this. You've been following gold since you were a young relationship manager. What's going on in your head right now?
I have indeed. It is just, for me, I mean, absolutely unbelievable. I mean, we will be getting into this, but starting the business in 1991 and having gold seen between like $250 and $320. And I remember me talking at conferences that eventually we will see $2,000 in gold. And what we are seeing currently, it is just $3,029 for an ounce of gold. It has gone through the roof. And there again, if you're patient, it definitely pays out. But this is, for me, I mean, I was convinced we would be seeing $2,000 once during my lifetime. But what's happening at the moment, I mean, talking about safe haven assets, I mean, it is just unbelievable.
Yeah, absolutely. Jamie, what are your thoughts on $3,000?
Well, I think it's a full circle moment in my life that today, when we have my dad on to talk about family businesses, that this is the news topic that we're covering, because I remember all throughout my life you were watching the gold price like your life depended on it. So
absolutely.
Every day we got a gold update, and today we get to be here to talk about gold at $3,000. So that's pretty neat.
That is indeed. It is just, I'm flabbergasted. I absolutely am.
Yeah, no, it's a fascinating thing. I mean, especially for those who own gold, obviously are feeling the highs and hoping it goes higher. But with that, I think we've kind of covered that, and people will obviously have their thoughts. So if you want, share in the comments. But I think we'll just jump into kind of covering the two generations that I have you guys here. I mean, there was Rob. You had the idea for WHVP back, I'm sure, before 1991.
Absolutely.
But maybe you could give us kind of a picture of what really inspired you to start a wealth management firm focused on American clients.
Well, I guess the main reason for that was, I mean, I'd been working at banks for like 15 years with the big universal banks, with a private bank. And even at a private bank, we were already working with American clients. And I just felt at that time that working for a bank, that clients were numbers and you didn't really get to know the client on a personal basis. And I just felt it was immensely important to just have a stronger relationship with a client than just at the bank. A relationship where you don't put clients into portfolio A, B, or C, but really talk to the clients, talk to the family, get to know them. And that, I had worked at 3 different banks, and that was never happening at a bank. And therefore, I felt back in 1991, this is really something we need to do. The banks are just not giving that personal service that clients really deserve. So that was really my main focus at the time, to build a small boutique firm with American clients where you get to know the clients or their kids or the family, and you could really build a portfolio for their needs and not just portfolio A, B, or C, if that makes any sense.
Yeah, absolutely. I think it makes a lot of sense. Jamie, I think on kind of with that inspiration, Rob, you were talking about the personalized service. How much of that, Jamie, growing up, did you kind of did you get that over? I mean, because we've kept that in the company culture. That's one of the major drivers that you push to us as a company. And so clearly that's made it through the second generation. But did you catch that feeling growing up as well?
Yeah, absolutely. I did. I mean, I grew up with this company. We had business partners stay at our house. I attended dinners with clients. And of course, we had a lot of dinner table discussions about how important it is to work closely with people and really understand them. We had discussions about currencies and the economy. So that's certainly something that's ingrained in me, that we are a family and we work with other families and not with other numbers. So I would definitely say that that had a big impact on me, and is also part of the reason why this is one of the cornerstones of today's company philosophy still.
Yeah, absolutely, yeah.
The other thing I felt was very important when I worked at the banks, when they had American clients, the banks used to keep like 60% of the clients' funds in US dollars. And I, back in those days already, I mean, in 1991, the US dollar was at one franc 30, 1 franc 40. I was then already convinced that you had to diversify out of the US dollar and that you would have to get into foreign currencies such as Swiss francs or euros. Back in the day, of course, Deutschmark and guilders. That has changed. And that was really also a very strong part of starting, that I always felt that a part of the total wealth of an American should be out of the US dollar, out of the Nasdaq, out of the Dow Jones, into European or Swiss or Scandinavian markets, and in those currency. That was also a big part of, for me, to be able to do that, I had to be independent. And of course, back in the day in 1991, independent asset managers were far and few. There was very few. There was probably 10 or 12 independent asset managers compared to, I don't know, you probably know how many there are now.
1,500.
1,500. Crazy. In Switzerland.
It used to be 2,500, but then with the recent licensing requirements, there was a little bit of a consolidation. So we're now at about 1,500. But still, only about 30, 40 of those are actively targeting US clients. So it's still very much a niche market that we are in, because most wealth managers in Switzerland, they either cater towards Swiss clients or other German-speaking clients in Europe, or then other European clients.
Absolutely. Okay.
Yeah. Well, maybe you could speak a little bit, Robin, initially starting WHVP, what were kind of some of the challenges that you had to overcome, whether it be, personal, like taking that step out to do something on your own, or even regulatory challenges?
Well, there wasn't that many regulations back in those days in 1991. It was fairly easy to get an account open. But of course, it took a lot of guts. My friends used to say, oh, but you're the head of the portfolio manager at a private bank. You're going to go independent, and it's 91 and we're in the midst of a recession. How can you do that? You make good money. Why would you expose yourself like that? So that was already one big step. And then, of course, just making a phone call or sending mail, or, back in 1991, working the computer with floppy disks for the bookkeeping program, and I don't know what the system was called to type something into the computer. I think DOS or something like that. So it was indeed, that was already a big challenge, but it was also, it is exciting, or it was exciting for me to be able to have a dream job, to do something you absolutely love, or even at a bank I loved it. So I had a dream job for 35 years, following the dollar, the gold, the markets, talking to the clients. It was very, very exciting. But of course, it was also, you get into your office, everything is set up, you sit down, and then you say, okay, what's next now? How do we go out in the marketplace, and how do we gonna convince people that we as a boutique firm are the right partner for you? So that was indeed, at the beginning, it was complicated. And of course, you jump of joy when you get your first client in with $500,000, and you feel very, very excited, that someone actually trusts you to hand their money over to you so you could manage the money for them. So that was definitely a very, very exciting time.
Yeah, I can certainly imagine. I mean, we still jump for joy for clients. So that certainly
hasn't changed in 35 years.
Yeah.
There you go.
Yeah. But do you have any key moments that stick out to you in the early days of WHVP that really, I guess, solidified the growth or the reputation?
Yes, I definitely feel that. First of all, we were published in a financial book, I think in 92, 93. Then I started working with Agora Publishing, the newsletter business, Oxford Club, Sovereign Society, International Living. And that, of course, gave us quite a bit of exposure, being able to be on the stage and talk about WHVP and the markets for 40 minutes. That's really, I think, was important for us to, had the growth that we really needed to exist. So that was definitely something that was important to us and for us. And again, there, I mean, we were the first asset managers who went out in the marketplace like that, writing articles into newsletters and going into Panama or London or Paris or wherever they wanted to see me on the stage. So that was definitely something that I think helped WHVP a lot.
Yeah, that's very interesting. Jamie, I would guess, as a second generation since you and Urs have taken over, kind of put those kind of two, I guess, questions to you. What were some of the challenges that you faced in, I'd say, taking over the company? And then the other side, for moments of, I guess, where it solidified in your head what you were doing was the right direction, how we were growing. Could you kind of just give a 30-year down the line picture?
Sure. I mean, Urs and I joined the firm a little over 8 years ago. So in the beginning, just as employees, then we took over the management, and then at the end of 2020, we bought the stocks from my father. And you all might still remember what happened in 2020. None of us have a US passport, or Urs and I don't have a US passport. So we were sitting in our living room with this newly purchased company. We were not able to travel to the US, and we didn't really have a plan or concept. Like, there was no handbook on how to grow a company during a pandemic, because it was the first pandemic that we have experienced, and it was our first time becoming entrepreneurs. So that was certainly the biggest challenge, and it was extremely difficult during that time to figure out what to do, how to build trust without being able to be there in person with the clients, how to build a network with our business partners without being able to meet with them face to face. But looking back, it was also a tremendous opportunity, because I think one of the reasons we're sitting here in this studio is because we bought the company in 2020. We didn't really know what to do. And then we really leaned into the content creation, being online, spreading the word about what we do through blog posts, through YouTube videos, through social media. And that has paid off. If we had bought the firm during good times and we would have been able to go about business as usual, I don't think that we would have been as present online as we have been in the past 5 years. And for us now, this is a very significant pillar of building trust and educating interested people, and also showing our clients how we work together, what we're thinking of, giving them an insight into our brain. So it was really challenging, but also really beneficial. And it's also interesting for me to hear, because what you have been doing is essentially the same thing as we are doing now, just with different technological opportunities. Correct. Right? You were also educating people. You were also spreading the word. Absolutely. And writing and talking about what you do. Yes. And we have now just taken this to the next level, because we have different technological Absolutely. Possibilities. But at the end of the day, the core philosophy is the same. What we do is complex. And there's a lot of misconceptions, a lot of myth about offshore banking for Americans. And to us, and I think also to you back in the day, it is just extremely important that people know what the options are, and that people know that solutions are available to the worries that they have.
Yeah, I think those are really good points. I mean, especially the educational side is such a big piece of it. There might be people who are interested and understand kind of the need, but don't have that know-how of I guess that pillar of know-how to make that decision to eventually step out. And being able to have this podcast, our videos, our shorts, our blog posts already puts I would say an encyclopedia of information before our clients that they can use as a resource, just to understand some of the moving pieces, not just the people involved, that too, but the whole process and all the little details that go in.
For me, the biggest challenge is still getting the information out to the right people, because I have calls with interested people almost every day. And oftentimes, more often than not, they tell me, I have been worried about US dollar devaluation. I have been worried about privacy protection. I have been worried about the political development in my country for years. And I just never knew that the solutions that you offer are available to me. So this is really the biggest part of the puzzle for us, to make this information available to as many people as possible, because offshore banking is available, it's legal, and it's more accessible than most people would think.
Yes, but we also have to, and I never forgot that, I think it's also of utterly importance to see that for an American who lives in the US and perhaps has not traveled as much as he should have been, to actually look at Switzerland and take the funds out of the US into Switzerland, that, you need a lot of trust for that. And I am sure that some people are insecure and they want to do it, but they say, well, here I am in the US and I haven't even been to Switzerland, and so forth and so on. And this is also something which I think both of us really understand. And that's why we always have tried to educate people, especially on that subject.
And as soon as we were able to travel again, we started traveling a lot. So Urs and I, and now also Jess, we are in the US 3-4 times a year. And that really enables people to meet with us in cities within the US, because that's really helpful. I mean, the digital content is great. It shows a picture into us as a company and into us as individuals. It's good to convey information and educate people. But a handshake and a personal meeting is still unbeatable. So for us, it's really this combination of having personal relationships, taking people out to lunch or dinner or coffee or whatever it is they'd like to do, and look them into the eyes and take time to get to know them. As you mentioned in the beginning, it is so important to build a relationship with the client and their whole family, to really understand what they're worried about, how we can help them, what they're looking to achieve. And that's why I'm extremely grateful that we are able to go back to the US and actually have those meetings. And at the same time, of course, we now get more guests into our office in Zurich as well. And that's always a pleasure too.
Yeah.
To welcome people into our offices. So if anyone's interested and curious to learn more about Switzerland and come by to Zurich, then they're more than welcome to say hello to us in person as well.
And that has always been the case for the past 35 years.
Yeah.
Perfect.
Yeah, so I think that's your point about family, understanding the generations. Rob, you mentioned that earlier. That's where I'd like to go next. Is what were some of the, I would say, how has family and the aspects around family really influenced the company in particular?
Should I get started?
You can get started, absolutely.
I think having a family business means that you think in generations and that you don't think in quarters. And that goes for our own company. I mean, as a firm, we have been around for 2 generations now, hopefully potentially a 3rd generation in the future, but also for the investments that we take, right? And also for the banks that we work together with. We really like to work with people who have a long-term view, and we also like to work with clients who are not chasing profits from the first quarter to the second quarter, but who are thinking about how they can hand over the wealth and the legacy that they have created to the next generation. And to us, it's very important to involve the next generation into those conversations. We always invite the beneficiaries to join the conversations if the client is happy and agrees with that. If the kids or the spouse, if they're adults, if they're responsible, there's no need to wait to talk to them until something happens. It's always best to have this long-term perspective, and I think that's really what sets us apart from the larger banks. But it is also what sets us apart from other companies where the profit is more in the focus than the long-term legacy that you're creating.
That is, yeah, I can see that. And of course, with Jamie always being interested in the markets and doing her education at one of the universal banks and doing the the bachelor in economics, I think. So those things. But on the other hand, the family business, we are still father and daughter. And when she came first in 8 years ago, at the beginning that was difficult because you are family. But I think we did very well the way we set it up and the way we worked with you. And of course, your energy and your interest in the markets and working with clients, that of course helped a lot. And I also felt that after you were ready, I felt you were ready, that I was really able to close the door behind me and say, okay, it's your game now, without me walking in once a week telling you as to, don't you want to do it like this or that? That you had the complete freedom to build, even rebuild the company, if you want to put it that way, with, all the possibilities you have today with internet and so forth and so on. So I think that's important too, that people see that too. I mean, that you have the family business, that I, as the founder of the company, really trusted Jamie as well as her husband Urs to, yes, they can do that, they are ready, and I can now leave. And I think that's an important aspect. Not everybody would be able to do that.
Yeah, absolutely. I think it's important to not romanticize things, because obviously we do have a private relationship, and I now work with my husband, which also brings its own set of challenges. So we have to be honest about that as well. And especially when it comes to the nitty-gritty part of like purchasing the shares. I mean, there's also my mother, there's also my sister, and there are a lot of moving parts involved into how are we going to do that, how are we going to finance it, how are we going to structure it. And that certainly involved quite a few challenging conversations and sometimes also emotional conversations. But looking back now, I feel incredibly proud on how we have managed it. I'm extremely grateful that you were able to trust us at a very young age with a lot of responsibility, that you saw in us that we were able and willing to step up and take on this responsibility. And as you said, this is not a given in the industry. I know some people who are over 60 and they are still waiting for their father to hand over the company to them. So I feel extremely lucky that we were able to do this at such a young age, at such an early stage. And at the same time, I, of course, also feel very grateful that Urs was willing to jump into this adventure together with me. And I love working with him. But there as well, we had to find our groove. We had to find our way on how we can best go about this. And now we have a very fantastic setup. We can still rely on you as an advisor. I know I can always call you. I can discuss any questions with you, but I can also share successes with you. I can share challenges with you. And that's, for me, extremely valuable, to have this emotional resource. Yes, you don't come into the office every week, you don't have a formal role, but you understand what I'm going through, you understand what I'm doing on a daily basis, and I know no challenge is too small for you to be interested, and no challenge is too big for you to not have been there in some form or capacity before. So for me, this is a great combination that I'm together with Urs and the rest of the team, we are able to steer the company into the future, modernize it, use technology, have like more regulations, take care of all that. But at the same time, we also have this decades-long knowledge and experience that we can rely on. And for me, this is really a perfect combination. And I mean, that might not be too humble to say, but I think it's quite a successful story on how we did this whole transfer from both sides, because by way of you having so much faith in us, we were able to keep every single client. And we heard a lot of horror stories about, well, wealth management is so relationship oriented. If like the founders go, you will lose a third of your clients, you will lose half of your clients, you will not have a company left. And we did the transfer and every single client stayed. And I think very big props to you, because you have communicated to the clients that you have taught us what we need to know, that we have had good and relevant education, that we have gained a lot of industry experience in other companies, and that we are ready to take this step. And the clients have trusted you. And I think the clients were happy that they have trusted you. So I'm very happy with how this whole process went. And I'm also glad that we took the time that we did take, because it was a several-year-long process. As I mentioned before, we have been employees for 2 years, then we have managed the company for 1.5 years, and then only going into the 4th year have we actually bought the firm. And I think this process also gave everyone involved, the clients, but also the employees and you and me, everyone involved, the time to get accustomed to the new situation, to do this in a step-by-step manner. And that has worked really well for us.
I think so too. And then, of course, I mean, I still see you as a team. I see you and Louis, and I see Jess and Julia, and Dan. You are a very, very strong team, and you work very well together. And that's also, something you could be grateful for. I mean, the way Jess is now doing the traveling. Julia's doing so many different things. When Julia has been with us with you now for 5 years, with me for 20 years, and she's got completely, she does so many things now, which she didn't do when I was there. So you really throw out a lot of opportunities also to your employees, which I think is fantastic. But going back to just a quick, have to throw this in there. You said you don't want clients to look from quarter to quarter, right? Which is absolutely correct. And then, of course, me going back to 1991, which, as I said, gold between $250 and $300, and the Dow Jones had 3,000 points for the first couple of years, 1991, 1992. And then, of course, talking long term, but in between 1991 and today, we had quite a few crashes too, where stock markets went down 30-40%, where you had to call clients at year end to say you are down 20%. Okay, the banks were probably down 30% because we were more conservative, but then the Dow Jones came from 3,000 to 40,000+ today, or gold being at 3,000, or the US dollar from 120, 130 Swiss francs to 88 Rappen. I mean, yes, long term, but in the end, long term, we're all dead, right? So it is, I mean, you often, and of course, I mean, I'm still an investor myself in my private wealth, right? And it is still something that often people don't have they think they have a very long-term view, but in the end they don't really. That's I think also something important for people to realize. I mean, that it is, yes, long-term, 1991 to 2025. That is not very long-term for me, but for people like yourself, it is definitely is. That yes, it would be worth your while, but then if you go through a year or two where your portfolio's down 25%, you think, oh, wow, what did I do?
Yeah, I fully agree with that. And I think what comes into play there is our closeness to clients, because it is so important to us to bridge this geographical distance through communication, be it with personal meetings, emails, being through videos or writings, to really educate the clients on the risks we're taking, the volatility that comes with investments, and then also go through every single position that we have, explain the thought process behind it, explain the opportunity and the risk. And I fully agree with you. Ticking a box saying, I will sleep well at night if my portfolio is down 25%, and actually sleeping well at night if your portfolio is down 25% are two entirely different things. And still, I believe that we are doing a pretty good job at being close to our clients when the times are good, but especially close when the times are tricky. Yes. Because then it's important for us to be there for them, to be accountable for our decisions, to explain what we're doing. Absolutely. And I believe this has gotten a lot easier, again, with all the technological means that we have, because back in your day, you had the phone and the fax, right? Yes. Yes. So now we can do video meetings, we can send out newsletters, we can send them videos, and I think that makes it a lot easier to be closer to clients and really hold their hands during the times that markets are more volatile. But I think this point that you brought up is also one of the reasons a lot of people work with a professional wealth manager, because it helps to take the emotions out, right? It's easier to stay rational and make the right decisions if you're an independent third party, whereas managing your own money is by nature of things a very emotional matter. So I think this is particularly one of the reasons why people work with companies like ours, because they want someone to manage their wealth that does not get shaken up if things are a little bit rocky in between.
That is right. And during, I think, and I know you still do the same. Due to our conservative approach, which we always had during my 30 years, your 5 years, the bad days in the markets have never been as bad for us as for most of the banks, because we always had a conservative approach.
Yeah.
So when the market was down 40% and we were down 20%, clients were, of course, not happy, but they knew that they could have lost a lot more. And I think you still follow that approach, as far as I understand.
For sure. I mean, we have a strong focus on capital preservation. Most clients that come to us, and I think it was the same during your days, they're at the end of their career typically, or the beginning of retirement. They want to preserve what they have built throughout the decades, and that really shows and is reflected in how we go about investing. All our portfolios are individualized and tailor-made. We also have some younger clients that are more prone to risk-taking. But for the clients that are not, we are a conservative asset manager that focuses on capital preservation.
Yeah, I think those are all incredible stories and inputs. I think what the nice red string that traced through all of them, is that trust. You know, that family that you guys, you know, as a father built with Jamie, raising her, but also involving her in what interested you, and you guys built that trust to lead for that. I would say that takeover was all trust that you build out throughout your life, and then going through that and being able to understand the value of a relationship in the midst of that was very important. And I think it even speaks, to take it a step further, of why a boutique family-owned second generation business makes a lot of sense to Americans, is because they understand tough times. They understand how to build trust with a family member. They understand how to build trust in a business setting, in a personal setting, and they understand how to communicate through good times, to celebrate exactly what you had said to Rob, to celebrate those wins, but also know that if there is that challenge, I can go to you. And I think that's something that me personally, from coming into the family business as an employee, I appreciate so much. I've been around family businesses my whole life. My father was a business owner. My grandfather was a business owner. Both my grandfathers, actually, even though one was more of a hobby, but they were all business owners. And so I understand family business, and I understand the challenges of what family businesses bring. And it was so easy for me to step in, because I had seen there's already this foundation of trust. There's a good relationship back and forth. There's not this crazy turmoil that can happen. And that spoke volumes to me, because like, hey, I can come in here and work for this family and know that we're headed in the right direction, and we are a place that can build relationships founded on trust with our clients. And that was monumental for me, knowing, and I would say even further to your point of wanting to treat a client like a client. You know, I did my studies in the US. I was worried that I was going to go to a bank and treat my clients like numbers. And I didn't want that. I didn't want to have the conflict of interest as working in wealth management or a relationship management position, and have conflict of interest between the organization I'm working with and the clients that I'm serving. I mean, talk about a nightmare. Like that was literally what I didn't want. When I got to know Jamie and Urs, 8 years ago now almost, and I got to know them, it was such an easy decision, you know, when I was offered the position, because like, yeah, of course, this is a place where you can truly treat the client well and truly work in their best interest and work for the interest of the company as well. So I think with that, one thing that I'd be very fascinated, I guess you kind of touched on it earlier with the computers and the floppy disks, but what are kind of some of the changes that you see outside in the modernization of what wealth management is like? And Jamie, maybe you can talk about where you think things are kind of headed in the future.
All right. Shall I start with
Sure.
this? Okay. So, I mean, if I'm very, very honest, I'm actually not too unhappy that I've been retired for the past 5 years. This is the truth, because, you know, back in 1991 and through the 90s, things were very, very easy. It was fairly unregulated, if you want to call it that, you know. I mean, if I wanted to, I could call the bank and I said, I've got a prospect who wants to open an account, and I could probably open the account in like 2 or 3 days. And now, of course, with all the regulations you are facing, at WHVP as per 2025, I think I would not have been the right person for all that, because I'm not the most patient person in Zurich, I could say. And I guess I would have gotten quite frustrated a few times, because in the end, of course, the reason for that being is, we know our clients, you know your client, we have talked to the client, and then if the bank or the compliance officer makes it complicated, I could get frustrated, because I say, well, I know everything. What else do you want to know? This is an 87-year-old lady. She's not selling drugs, So for me, as I said, it would have been, I'm not unhappy that have been out for 5 years. I have to admit, things have changed dramatically.
So I started in the financial industry in 2009, and I think that was right on like the brink of change. So I have never really seen the unregulated or fairly unregulated state of affairs. And I think that really helps, because I have only ever known banking to be a lot of paperwork, a lot of administration, a lot of regulatory complexity. So that certainly helps, because while I'm also not the most patient person on this planet, I think I have a different frame of reference, because I have not been in the financial industry in the 90s. I think looking forward, the biggest driver and changes are probably going to be the regulatory changes as well as technology. And with regulation, we have now seen quite a bit of changes in the past 5 years since you've been gone, because we now also need a license from the Swiss Financial Market Authority. Before that, we were just registered with the Securities and Exchange Commission in the US, and we're sort of like self-regulated here in Switzerland. And having gone through this process, it led to a little bit of a consolidation in the industry. We briefly touched upon that earlier in the conversation. I think that was a big shift. And now going forward, I don't expect significant increases in the regulatory environment, because we are now highly regulated. I think it's going to stay more or less at the level that we're currently at. Looking at technology, especially now with AI, artificial intelligence, it's impossible to say the direction that everything is going to take. It's certainly, I think, a good guess to say that things are going to change quite drastically. However, I do believe that the drastic changes are more for like the surrounding functions around wealth management. I personally believe that our core business of helping US clients preserve their legacies through offshore banking, I think that's going to stay the same. Because all throughout this conversation now, the company has been around for almost 35 years. And essentially every part has changed except for the core business, right? So today, the world looks so different in 2025 compared to 1991, but the core business is exactly the same.
Absolutely.
And this, to me, is very interesting. And it's also kind of beautiful, because it shows that the service that we are offering makes sense in the long term, right?
I agree.
So I believe that the human touch is going to stay as relevant as it is right now. I believe trust and personal relationships are going to be as relevant as they are today. I do believe that international diversification is going to stay as relevant as it is today.
Yes.
I do believe the US dollar is going to continue to lose value as it has for the past 3 decades and a lot longer before that. So all those things, I think, are going to remain the same for the foreseeable future. Now, how we go about researching companies, how we are going about communicating with clients, how we are going to go about regulation, this all might change. But the core business, I think, is going to remain the same. And if we are talking now the shorter future, like maybe the next few years, I do believe that there's going to be an increase in interest in our services, because times are extremely volatile. Things are changing rapidly. There's a lot of political uncertainty. There's a lot of geopolitical risks. And all those factors are not just driving the gold price, they're also driving interest in safe, neutral financial jurisdictions like Switzerland. So I believe in the short-term future, we will have a lot of work to do. In the long-term future, I think we will see changes in all supporting roles and functions, but not necessarily in the core business.
I agree. And especially, of course, Switzerland being Switzerland, not only our economics, which have been very good. I mean, interest rates, which are still very low, inflation that's very low, and especially with everything that's happening worldwide, the Swiss franc is definitely has been, and will be a very, very strong currency because of the way Switzerland is run.
Yeah.
Yeah.
Absolutely. I mean, we have extremely low levels of debt. Our debt to GDP ratio is roughly 40%,
Right.
compared to countries like the US, where it's at 140%. And we also are unfortunately living in times where neutrality becomes more relevant again,
Absolutely.
right? Switzerland is not part of the European Union. It's not part of NATO. It's not going to get dragged into any armed conflict. We were lucky enough to avoid both world wars, despite them happening all around us. And I think those are considerations that really drive a lot of people to call us and email us. And I believe that's something that we are very well equipped to help people with.
Yeah, absolutely agree. And on top of that, of course, the truth is that even the US has a big interest in a weaker US dollar because they are exporting a lot and they, want themselves to be, interested for other parties to buy. And if the dollar would not be the world reserve currency, oil and gold and whatever is always traded in US dollars, if it would not be the world reserve currency, the US dollar would, as per today, be a lot lower than it is right now.
Yeah, I think that's a really good point, and I think something that kind of leads into kind of where I'd be curious to see is how do you see, I guess, the WHVP going, Rob, from a historical context. I mean, you obviously went through a lot of technical, like in terms of innovation that was happening, but as Jamie mentioned, the core business is taking care of U.S. clients. That hasn't changed. But how were you able to manage kind of innovation for new opportunities for your clients with that kind of traditional, I would say, those traditional values? How did you manage that during your time? And Jamie, I mean, we've even seen a lot of, in the past 5 years, we've seen a lot of innovation.
Yeah, well, that was definitely, as we said before, the personal relationships. Me traveling to the US several times a year, conferences that were organized with, I would say, at least 80% American attendees who are interested at these financial conferences. So that was really, for me, the way how I felt we could and should be growing. And we had very, very solid growth for many, many decades. So that was nowadays things, as you said, are easier when you have a prospect and you can do a Zoom meeting and look at each other. That is definitely easier. For me to, back in the 90s and even in the 2000s at the beginning, to be able to look at someone's face, I actually had to go out there and, meet with a prospect and talk to them and explain to them as to what we are doing, which has now definitely become a lot easier. And it might also be that due to everything that's been happening the past 35 years, that Americans, even the younger generation, which we didn't have. I think you at the moment, you get younger clients in. My clients were definitely, a younger client would be early 60s and then up from there, because that's how they had a possibility. But now with even a lot of, let's call it the younger generation, 30 to 50-year-olds, a lot of them also due, to be that Apple or Microsoft or Google, young people did get into money too if they would have worked for those companies. And I think you get a younger clientele today than I did back at the beginning of my days.
Yeah, absolutely. I think that is also one of the consequences of having done this generational transfer, right? Because we still have employees in their 40s and 50s who have been with the firm for a decade or two. But at the same time, we also have millennials that work for the firm, like myself, who have been a little bit newer to the industry, but have a good understanding of the next generation of clients have a good understanding of technology. And then also we have a pretty good gender mix. So we have women in our management team, we have female relationship managers, and the Swiss wealth management industry is still quite male dominated. So I think about 9% of Swiss wealth managers even have a woman on their management team. So of course, if we're looking at younger clients and also female clients, they're probably going to be more interested in working with a company where they see a team of different people represented. And I think that's something that's been quite helpful to us as well.
Yeah, I think that makes a lot of sense. Just having the deep understanding of what a client, who a client is, and how they function, how they think, makes a huge difference. And I think that's, for me, what I always like is, I would say, the face of our company now in the second generation looks like a bunch of crypto bros. But we are so conservative minded in terms of capital preservation and approaching, yes, there's risk that we have to manage to take good opportunities, but at the same time, we all think in that, okay, I want to do a job that is going to be good enough so that this person can move this to the next generation. And I think that makes a huge difference in terms of, that sustainability for the client and preserving their wealth. So I guess I think we've had a really, really good conversation. And what I would like to ask both of you to give thoughts on is, if there's a family out there, a business, or even thinking about passing on their wealth to the next generation, what are kind of the tips that you guys would give them about going through a business succession or speaking with their next generation of wealth holders? How would you guys go about that? What are kind of some tips you would give them to put them on the right path of doing that successfully?
Should I start?
Yes,
Okay.
absolutely.
I think first and foremost, it's very important to have honest conversations with each other. Be honest about the wishes and hopes and fears that both generations have. And then I would also say gratitude is very important, and appreciation for the mindset of the other generation, because I think the older and the younger generation, they have different strengths and weaknesses. They can benefit from each other. They bring different mindsets and different strength to the table. And it can be extremely powerful and beneficial if those two sides do not work against each other and try to convince the other side that their mindset is more true or better or whatever, but rather that they can work together and combine decades of experience and knowledge and life experience with a fresh mindset and a lot of innovation and a lot of new ideas and a lot of energy.
Yeah, fully agree. For my generation, if you want to do something like that you're not opinionated, that you really have an open mind, and that you also say, yes, I am ready to leave. I do not need to work until I'm 82 years old. I have seen it. I have done it. I trust the younger generation. I've worked with the younger generation for a couple of years, and I trust them, and I want to give them that elbow freedom to move. And even we had, Jamie, you and I had discussions where you said, well, how about this? And I hoped I was anyway, that I was open-minded and said, yes, let's open that door and let's try this, and not saying, well, I've done this for 23 years and this is the way we're going to do it. But, be open-minded. I think that is very important for the old generation, giving it to the young generation to say, yes, this is the younger generation. They have different ideas and they should follow those ideas and not go back to 1991. Well, that's how we did it in 1991. This is what we're going to do in 2020 or whatever. And I think that's very important. And for any, sort of handing over the company to the second generation, that you're really able to do that and say, okay, yes, they should and will and could be doing this, and I give them all the trust they need from me. And if they need something from me, they can ask me, but I'm not gonna come up with ideas every day. Well, we did it like this. No, let the young generation take over and do it their way and not my way.
Thank you, Rob. That was great, Jamie, as well. Rob, thanks for coming in today, sitting down with us. It's been an absolute pleasure, as always. We will definitely be looking forward to seeing you in the office again, as we always do. Jamie, thank you.
Thank you so much for coming.
Absolutely. It was a pleasure. I haven't done this for a couple of years, but this was very interesting. So absolutely loved chatting with you guys. Thank you so much.
Thanks again for joining us on this episode of the Swiss Money Secrets podcast. If you would like to learn more about WHVP and what we do, check us out on our website at whvp.ch. Or you can check us out on any of our social media handles on LinkedIn, Facebook, YouTube, or Instagram by simply searching WHVP. Have a great rest of your day.